Okay, this is going to be a low energy look at the forex market, starting with and mainly focusing on the dollar index and wondering if we may be looking at a low in for the decline from January 2017. As you can see, the 5 clear waves are in the monthly chart. It has not yet reached that trend line level, but it doesn't need to. So I asked on Twitter this week if, I think yesterday, if what people think about the dollar index, if we have a new low to come or not. Only 16 responses, but half of the people who answered think that one more low is to come. 38% think the low could be in, or is in rather, and I'm one of those who's going to work to that side. And then 12% of people are just cunts and want to see the US decline and fall, which is not going to happen as it is the dominant power in all respects around the globe, except for, of course, art and culture and sophistication and many other unimportant aspects of life. So starting with this, how to look at this. I don't have a count on this. I've been working the count on the euro dollar instead, because they're basically flip charts of each other. 57% euro is in the DXY, I think. So it's a large influence. So 2 counts I'm working on this. I've shown these before. One is a possible triangle for wave 4 into December 17. This is my preferred count, and it suggests that a high is in on 25 January and a downward correction has started, a downward move, which overall would be corrective, has started. Now, for this idea to work, it is possible for me to count a 5-wave decline here on a new low. Actually, hold on, I don't remember if I got that low. It's a bit of a forced look, but I can do it on this new low. Especially if I kind of wedge in this part, so I can get 1, 2, 3, 4, 5. I feel I can do that. There's another way of doing this, which was, I feel that I can get a count in here for 5 down. So this would give it a different look. We're looking for 5 down overall to suggest that a high is in and a break of trend here, which I feel is important overall. So what I'm going to look for is if it can base here and if it can move up over the next day or two. I'm going to look for any rejection to come in, maybe at the trend line here. I don't know. But if any rejection comes around here and it's showing weakness on the 4-hour or daily, I would look for an opportunity to head down. It's not there yet, but it's something I'm considering on a weak move up. And that would work the idea that we're looking at a more bearish decline, where one would be, let me go down to the 4-hour. One would be here with a wedge. Corrective for 2, and then this doesn't have to be 3, it could be, but it could also be 1 of 3, 2 of 3, and then a move down. So I'm going to look for any weakness to come. That is my preferred view, as I'm going to work the idea that the high is in. Now the other view is that we have one more high to come and one more low to come on the dollar index. Now this count I showed before, I'm not going to be able to maintain anymore because it has a disproportionate tail end here. The size of this is out of proportion to what I was preferring to work here as a small 2 there. Elliott wave is not just about numbers, it's about size and time, and the sheer size of this and the time it took to unfold is way out of proportion to this. So I'm going to have to throw away this count, and I can adjust it to something that I would also consider forced. Give me a second here. Okay, so the idea would be, this is forced, 2. This I would probably have to force again. as one of three, 2, 3, 4, 5 for wave 3, and now this is wave 4, and we would see another high to follow up here off of that trend line. And let me just go to the other one. We would see a base here and move up for another high. So this is open, and this is what half of the respondents think is likely to happen, in that we will hold the line here, or maybe just fracture it slightly, and then move up to a new high. So both are possible, in my opinion. Given the upward trend overall for the past 13 months, and the fact that it's sitting on support, it makes sense to favor the upside. However, I am suspicious of this just because of my count, and so I'm going to look for weakness to come in if an up move is initiated here. I'm going to look for weakness to come in around mid-range here, around 123.50, and see if it can keel over. And that would effectively put 5 waves in here. Now, another thing to mention about this is that on the weekly time frame, it's true that this last segment here does not look like it's 5 waves. It looks like it's 1, 2, 3, 4, 5. So I get why people are looking higher, and it's totally possible. The only way to justify this, I think, as being done is to use the triangle idea here for 4. And that is also totally valid. So it is a matter of looking at lower time frames. The down ideas worked this week on all of the dollar pairs. So we have to see what happens. It's open to either direction on the dollar index, going back to that. It is also at trend resistance here, and we will probably see a bit of a downward move. I'm going to look for that to hold around 89.50 and move up. So let's see if that happens, and then a bigger move can work, because if you look on the monthly, although it hasn't come right down, my favorite 8 EMA, as you can see, which it is an adherent of, that's the only moving average which is of true significance in my opinion. The 8 exponential moving average, it trends on all time frames. So if you don't use it, give it a try. I picked it up from an Elliott Wave book a handful of years ago, and I see some other traders use it, and it is a great one. It's the only really paying trend line in my opinion. 200-day, 55 EMA, they have some use perhaps. I use the 55, which is this one, but the 8 is the big payer. And in this monthly, it has a lot of room to move up to the 8, so I have no problem working the idea that a low is in here and to look for that to move up. And if this idea is correct, that a low is in off a triangle and a high is in off of a triangle in Euro US dollar, then over the next week or so, we should see the weakness and we should see it start to turn over. Even if it breaks the trend up a bit here, I don't have a problem with it coming back down through it. That's not a big deal. Trend lines are useful, but they're not everything. So let's see. As usual, however, just to mention one more thing, if it does break up strongly, impulsively, and then it corrects, that will be a buy signal. So it's a matter of the price action here, but I know what I'm favoring. So let's go from there. Okay, the pounds, I'll go in order. This worked really well this week. The idea on the pound is that it could be something more bearish, or we could be just looking at a 3-wave correction for A, B, and then 3 waves for C here. And there is some divergence here. So on the new low, I would suspect that it's not done yet, and I'm going to look for another low to come. But if that low does hold, there may be a chance to move up. Again on this, I'm giving it the bearish option, as it can turn into something more aggressive to the downside. And the pound is looking really weak. I'll go over pound Australian. That looks like a top could be in on the correction. I don't trade pound yen or pound Swiss franc, but one person I follow on Twitter does, Rudy, and he's put in some good charts on those, so have a look over there. So simple view on this is that it's coming back to trend line here, which is Jin's idea about hole filling, reversion to trend, and then another move up. So I'm going to continue to look at the downside here. The daily close on Friday closed outside of the wick range of the previous 3 days. So I'm going to look down, and as you can see again, the 8 EMA is holding price down. So I'm going to favor the downside here towards trend line. And the count has been working fine, so any move up may offer a sell, any move down may offer some support. So it's in that kind of mid-range with downside favored. I think I mentioned before, I don't know, I don't have a count for this, and it is possible there was a truncation here, but this is looking corrective, and most importantly on this, if anyone hasn't seen it before, go to the other chart. Long term, going back to 1985-86, cable has broken beneath horizontal support, which should effectively turn to resistance. And stochastics are up at the 80 line, which is a topping level for corrective moves. So I'm going to look at this to move down in a monthly sense. And again, the 80 EMA is way down below, so I like the downside here. It is working off of the 55 EMA, which, as you can see, not every time, but many times it has previous reactive points. So that has a record here of working out. So downside is favored here, and this has been working, so no need to fix it. Okay, Australian US dollar. What I want to mention, well, this has been the worst pair in terms of holding up to give the impression of making another high. It's been weak overall. Now, what I want to go on to here, because I'm not going to deal with gold, I'm running out of time to make this video. I'm not going to look at gold. Fuck it, let me just do it now. Okay, so let's go to gold and yen now. Sorry, gold and Australian dollar. Okay, comparison chart. These two trend in tandem, dance partners, and if Australian US dollar is going to fall here, as I think it will, because it has made enough of a three-way move with the new high 2 weeks ago, or three weeks ago in fact, it's likely that gold will come down here. So I'm certainly, as I mentioned in the video 2 weeks or so ago, I'm definitely not bullish on gold at this level. I thought it may see a new high, but as you can see in this chart, it's pretty clear, right? So let's hop over to gold briefly. The idea I liked on gold was that if it does, I was talking about it seeing a break above even though it hadn't, and if it did, I would still expect it for a move back to 1200. 1200 remains the level I like. Even if it does come up a bit high and break this level a bit, I would look for it to head back down. So that is my view here. And now, leaving gold aside, this pair is given the impression that it's pretty much done and that any bounce will be a sell opportunity, and it has worked, and the trend line has been really resistant and adamant so far. I think it's breaking up out of that, but I'm going to look at any move up as a correction. Again, to keep it very simple, the 8 EMA on the daily, the blue line there, when it comes in to touch it, it will probably find resistance and a further deeper move down. So I'm going to look for this upward move on the 1 hour to be corrective. Let's see, to be a corrective move towards the 8 EMA and another move down, perhaps to a new low. This pair looks really weak, and I have no wish to be on the long side of this, or no long idea either. So in my opinion, this has done basically a corrective move up to here. It made the new high here. So any upward move should offer a selling opportunity, I think, and a new high at this stage is pretty unlikely. And New Zealand US dollar, I feel the same on this. Now, this downward move here, I think, in my opinion, this is more likely to be the start of a new down move, as this on its own is probably a completed correction from 2015 through 2017, and I would say this is the start of a new down move. Now this down move here, it was a corrective down move, which I think is fine because there's been a lot of corrective moves in this overall. But as you can see on the daily here, this is a corrective move in my opinion of 1 down, 2 up, and then 1, 2, 3, 4, 5, which would make it a 3-wave move. A, B, and 5 for C, let's say, like that. And the up move, I don't know what this is, but it's probably corrective, and I'm going to look for this to maintain a downward bias now, a downward slant. The move from here has probably been a 3-wave move overall, but the key to that, I don't really care about labeling it now. I'm looking more at a trending position, and I think it favors the downside here. In my opinion, this is likely to be corrective. As you can see, it's chopping up from the low. And so I'm going to look at this as a selling opportunity as it moves into trend resistance. The horizontal line here is one I use for a different purpose. It's actually not meant to be support resistance. It kind of comes in line there, but I use it for something else. So I'm going to look at this as a corrective move up on the 1 and 4 hours, and I'm going to look for it to fade out on the early days of next week and roll over and make another new low. Well, let's just say make a down move, which would probably likely favor a move beneath 71.76. So downside is favored in New Zealand US dollar, Aussie US dollar, so 2 corrective bounces and sells, I think. Pound can go either way, but I'm favoring the downside and holding to the downside. And Euro US dollar again can go either way, but I'm favoring the downside based on the triangular, the thrust from the triangle to complete 5 waves from January 2017. So all that implies the dollar index has put in a low, in my opinion. But the other counts, like I said, it's totally valid, so we'll see what happens. US dollar yen, my favorite pair. Well, okay, not entirely, but. Okay, the issue here is really, really simple. As simple as it can be in trading, I would say. 5-wave advance. 2011, 2015, 5-wave advance. From 2012 through 2016 to 2018. Trend line. It was very well established here. A bunch of touches, firmed it up, kneaded it into what should be a pretty strong trend line to hold. And at the moment, it's testing it. So at support, I would look to buy this. Given the strength of this line so far, and what I would say on the daily, well, there are a couple things to say about this. It's still possible to count this decline as 3 waves. Now, there are different ways to count it. It does not have to be B here. The idea on this B is that this is a triangle. B ends here, corrective triangle, and then it's a kind of 3-wave move into here. There are other ways to count it too. You can also put B here, and you can do a long, in my opinion, valid 1, 2, 1, 2, 3, 4, 5, 4, 5. But in any case, it's at support, and I think off of the low here, just 1 second. Okay, this is the low. The trend line is down here. Now, this could have been, this segment here, just to talk about what it could have been for a moment, even though ultimately it's not a big deal right now. It could have been a triangle for A, B, C, D, E, and a thrust, though it could also turn in to a wedge, and we see one more low. And that might work out quite well, actually, because if you look here, one more low to, if we come over here to 8 September 2017. I'm not sure how significant this is because it's small and it's on the 4-hour. You can see it on the daily too, granted, but I'm not sure how many people are paying attention to it. And there is the case of overemphasizing gaps, but it's there, so be aware of it. There's a gap here from September 2000 and 8 September 2017. So the gap comes in effectively at, 107.87. Hold on. It closed on Friday at 107.83. So if it does turn into another wedge, if it comes down for one more low, fills the gap at 107.83 right there, and then moves up. That's totally valid at support. So either way you want to look at this, triangle thrust or possible wedge for a series of threes. There's a gap at 107.83, and there's a decent chance that it's going to find a low there, because what do you want to do at support? You don't want to sell this. If there's an established support line, you want to look for options to buy it. That's the easiest way, anyway, to buy support and sell resistance. So on this was the Harami candle, the little pregnant one, and this is the mother, and it thrusted beneath the it broke down through these little terms, and there's the gap, and it tried to fill the gap. It didn't make it on Friday, so we may see a bit more. Now what's this is going to show on next week is that the 8 EMA is going to come in about 110.24. And if you're far away from the 8 EMA, the only time that it's worth, I mean, most of the time I look for the 8 EMA to be really tight to price. The times it's not tight to price are during thrusting impulse moves where it separates. And there are other times when it's not trending, when it whips through. But during trending moves that are not third waves, it tends to stick to it. And in this case, because it's quite far away and at support, if we see a new low, I'm going to look for a chance to buy. If we don't see a new low, it's more likely that this is a triangle thrust and there will be a reversal in the early days of next week. Now, for that idea to work, we'll probably need to see a convincing upward move, a bit of a stall out, and then another chance to buy. So it'll be clear if it's going to be a triangle reversal or a wedge on Monday. But even though I've been kind of tossed about in this, analysis-wise, the monthly view on US dollar yen is not dead yet. The monthly view is that the stocks are trading sideways, and that if it can find a reversal this month, that stock line will reverse. So have a look at this and remember what Aussie US dollar was like back in the summer, right here. It broke beneath the trend level on the stocks, found some support, reversed the next month, made it back above, and thrusted higher for 1, 2, 3, 4, well, 4 months in total of upward movement. So that type of thing here can repeat on US dollar yen. Doesn't mean it's going to, but I'm going to look for support to hold for now. So let's move on from this. Aussie New Zealand, I have to get this talk over in the next 12 minutes or so. So let's see what we have here. Aussie New Zealand, this crapped out. I made a mistake on this, I think 2 weeks ago when I made the video. And I talked buy in this. That was a mistake. I'm not going to bother to mention the word buy or sell again in this video because it crapped out hard. However, the overall monthly picture has not yet changed. It is still convincingly within trend here to give the impression of three waves overall from the 2016 low. 3 waves here. This still looks like a 3-wave correction for X and a 3-wave move up. It doesn't mean it's going to happen, but the idea overall is to look for a higher move here for A, 3 waves down for B, and then a crooked 3-wave move up for C. On the daily, it's looking like there's a trending channel which has not found a support level just yet, but maybe trying to. This whipped around. There were a bunch of changes here. First, this I thought was a trend breakout. No, it failed. Then I thought this was a trend breakout. No, it failed. Then we come up to here, stick this in, drop it down to here. You have a bit of a level with RB and Z a few days ago. We got the spike up, reversal as considered possible. And now, well, you can see what's in front of you. But what I would say about this is that it looks corrective. Doesn't mean it can't morph, doesn't mean it's going to turn around, but the appearance on it so far appears corrective. Yes, this downward thrust is more violent, but I cannot say it's terminated or rather violated any significant level yet to make me think, okay, well, it's unlikely to turn around, because on the monthly it still has a chance here. The stochastics are still holding up. So let's see if we can get a level on this into the next few days and find a way to turn around in the coming week with, again, the 8 EMA way up here at 109. So the little trender is a bit too far removed. Aussie Canadian, this is another one that's looking like it could be putting in a three-wave move, keeping in mind that the monthly is bullish here off of the December hammer and it's coming down to retest. What I would say about the daily is that you can see its broken trend and it has violated that level. Friday's candle was very strong off of news. Which news I don't remember. But this is 3 waves down. So I'm going to see on Monday if there's a buy opportunity here, just to see if one emerges for a move up. Because although it's broken trend on the daily and it's trying to resist, the candle is pretty impressive, and I'm going to see if off the thrust it can put in a bit of a 3-wave move like this, and then have a buy opportunity for a move back up at least to like here. See if that's valid here. You can see there was some divergence in here off the stocks, because the idea overall is that on the, you can see 3 moves up, 3 waves up here, and I expect this to continue as 3 waves overall. I would call it 3 anyway. You can call it 5 if you want to, but I work 3s on this. 3 waves up on the weekly. I like the idea that it's got 3 waves overall. I could definitely see another in this, but the issue is that the stocks are holding up for now, so I'm going to look on Monday if there's a small flag to buy into. And then if there's a further decline after that, see how it emerges, but the stocks are just holding up. If it does reverse further and come down, I'm still going to consider this bullish, because I am working a bullish case on the monthly. The monthly is what counts, and I can definitely see the possibility of a move back to test the opening level of this at 97.59 and move back up. That may not occur until next month. Who the hell knows? But for now, because the minimum requirements have been met of 3 waves, I'm going to, and the candle is pretty impressive, I'm going to see if we can get a little flag in here and a chance to buy on Monday or Tuesday. Okay, just 1 second. Pound Australian dollar. Now, my view on the Canadian dollar, it's not that the Australian dollar is strong, it's that the Canadian dollar is weak. I'm looking for weakness in the Canadian dollar. You can see that on US Canadian. I'm not going to go into that now, I'm out of time. Pound Australian dollar, bearish from the 2015 high. 5 waves down. You can call this all of 4 rather than me splitting it 3 here, 4. The whole thing can be 4. It's not a big deal. The fact is, well, facts. Okay, the overwhelming opinion is that we've had 5 waves down from 15 to 2016 late. And that from there it's been what's obviously so far a corrective move. And on Friday it just made a new high on that, as you can see, just pierced the top. And so far it's coming down impulsively, though it has not properly established a 5-wave decline. There's trend support here. So far on the 4-hour, we have a 1, 2, and 3, and I'm going to look, broke trend here, resisted so far here, and if we get a 5th wave move here, I'm going to look for that being 5 down, 1, 2, 3, 4, 5, then a 3-wave correction, and then the move down. So 5, 3, and then resumption of new trend. So we need a 5-wave decline, in my opinion. So far it looks impulsive. Sometimes new trends start looking correctively. Like, I don't have time to go into another example, but there are loads of them, including even on this chart. Sometimes down moves start correctively and then morph. You can see it's a kind of wedge. So that's the thing about Euro US dollar, Pound US dollar. It can start with a corrective look and morph into something more bearish. Because these markets are fluid and ever moving and ever changing, they always have that morphing, transformation, transformative ability. So there's not much set in stone here. Not in ongoing moves. Okay, Euro Pound. I thought on the pound strength, we, from the BOE on Thursday, I think it was, we may be seeing the resumption of trend, but no, it reversed. So this is not looking likely. What I would say about this, I'm not going to be bullish on this for the 2015 to 2017 5-wave move. So I'm going to look at this as 5 waves down. And I'm going to wonder, because I'm not going to deal with this as it's too whippy and too jagged at the moment. I'm going to consider that we may be looking at 1 to here, which I'm going to stick with, 3-wave here for A, 3-wave for B, 3 waves for C, 3 waves for D, 3 waves for E, and then the move. So you have a triangle and then a down move. I'm going to favor the bearish side without getting involved. I'm not going to bother to get whipped about, stopped out, and just frustrated and irate from, I'm getting irate already talking about it, from getting involved in a pair that's whipping around and not trending. So this is something to watch and something I'm going to stay bearish on. I don't think we have a view to the upside here, because if you look back to 2015, I think it's 5 waves done post-Brexit. I was looking for 5 waves done here initially, thinking it may be done. New high, so I'm going to work it definitely from here. I don't think this is extending. But anyway, let's see what happens. Gold, yen, Canadian weakness, Bitcoin not interesting. It's the wrong year for Bitcoin. The right years were the previous years, in my opinion. Future years, maybe, but good luck if you're going to trade it. Okay, that's it. So let's see if the dollar has its low in. Good luck, and talk to you later. Bye-bye.